This is Josh Jelinski, the financial quarterback. Don't touch that dial.
In New Jersey, where I live, it doesn't seem like there's any building. It seems like there's a dearth of housing. Now, maybe our particular spot, a lot of Brooklyn and New York City kind of is still bleeding down due to COVID. They don't want to be stuck in a city, so they've kind of migrated to the suburbs. I'm just focusing on the region where I live, where it seems like there still is a housing shortage. Is my thing just, is our region kind of an anomaly? And
I don't look at regional figures. I concentrate on the national.
What do you get, like the Fred, the 20, what is it, the Fred 20 city index?
Well, in terms of, I want to distinguish, in the single family market will recover. My problem is not the single family.
Okay, it's multifamily because they use cheap money.
The multifamily sector is the one where I see the difficulty.
I agree with that 100%. Yeah.
I think that the rents are coming down from the big firms that survey this. I think one of the series that I've seen, which has been pretty reliable, shows that rents are now down in the 3 to 4% range from a year ago. And that's where the delinquencies are. We've overbuilt. One of the areas that probably received more of the excess liquidity in 2020 and 2021 was the multifamily sector. And that's the one that's the most vulnerable.
Yeah, definitely. I remember in 2020, people would say, oh, you want to get rich quick? Become a multifamily landlord and use the cheap money to buy, $10 million buildings. Then the rents will pay your note, all this other stuff. People were on all over social media talking about multifamily, and now it's kind of a scam. Not a scam, but so where do you get your data? So if I want to look or show our viewers, where are you seeing this negative news in multifamily, just so I could reference it?
Well, I think probably the Redfin survey on rents is the best place to go. They're a big realty firm that collect information and the weakness in rents. Also, if you Google foreclosures of multifamily apartments that have been taking place, some of those articles have fairly good descriptions of the problem, the general overcapacity, the fact that a lot of projects were financed at very, very low rates. They had 2 or 3 year financing on really a long-term investment. So those loans have to now be refinanced. The cap rates were very low then, which means you could borrow a substantial amount of what you had invested in the project. Now the cap rates are considerably higher, and so you cannot borrow as much against the property. A lot of people went in with very thin equity, and because it was considered such a sure thing, just as you said. And I think there's going to be quite a fallout in that sector as we go through the year.
Definitely. So just Google multifamily foreclosures, and I should see some stuff. I saw the Redfin data.
There have been several projects that have gone on, and there will be more.
But who do you trust? Like when you look at data, generally Redfin.
Well, you can also look at the housing figures and go to look at the multifamily versus the single family, and look at the amount of the multifamily construction that took place over the last 3 years. Been extremely high, and it was really outside what the demographics require, and that's a key fundamental element in my forecast for that sector.
So let's go to commercial real estate. I'm kind of worried about the same thing in multifamily for commercial.
I look at the Moody's office vacancy rate, which is the lowest now since the 1990s. There's a very, very substantial oversupply of office space. And I think that that sector will be weak not only in 2024, but for several years. We're going to have a long-term workout situation here in the office sector.
What do you think will precipitate its increase again? I mean, COVID, obviously 2020, low rates, people buying commercial buildings in 2020 before the sort of COVID meltdown. That makes sense. Almost the same theory behind the multifamily boom and then bust. People aren't returning to work. I'm seeing places like Regis and IWG They're even retooling workspaces so people for $300 they get a room, or for $1,200 they get an office. So they're kind of changing the way people go to work now. Is it just people aren't renting 5,000 square feet buildings anymore?
Well, also keep in mind that if you look outside of your high multiplier sector, which would be the big ticket items, both the business and the consumer sector, international trade and the like. In the last 3 months, we've had only an average of 100,000 gain in employment a month, and those are all in very staid, low multiplier sectors. And so there's just not the demand for office space at the present time. And I think we're going to continue to see further weakness in the labor markets. And so the oversupply that we see today is not ultimately going to, it's lower now than it will go lower as the year progresses, as the labor markets continue to weaken.
Anything else on the commercial real estate front?
In the commercial sector, you have the same problem you do in the multifamily construction. There was a lot of interim financing that was arranged at very, very low rates, which allowed construction to go forward at a very substantial pace. And now that short-term financing is no longer available. And also the credit quality of the borrowers has deteriorated. So the likelihood of a replication of that is not in the cards, and we're going to have to work off those excess supplies that were created.